So I always advocate that you should not churn your portfolio or trade too much. And a lot has been written about the negative impact of churn on your portfolio. However, the opposite side has never been explored so much. When the situation warrants a change and you don't change it, that is also harmful. So you don't trade much. But if the situation warrants that you either sell a particular security or change your portfolio positioning and you don't do it, that is also wrong. Endowment bias creates the second or the latter impact. Typically, there are 2-3 sources of endowment effect. One is loss aversion, that people don't like to book losses, even when certain negative news comes in, and they are willing to accept low probability for holding on to these securities. So loss aversion is an important source of having an endowment bias. The second is anchoring. People get anchored to a certain price. Say they've seen a 52-week high or an all-time high. Now they demand that price for selling their investment, even if the situation has changed. And one of the interesting impact of endowment bias has been studied in the IPO market. And this was studied by a few researchers for the Indian IPO market. As you would know, in India, if a IPO is oversubscribed by a big amount, people are allotted certain minimum number of shares, but they are done on a random basis or a lottery basis. What these researchers found was that even if an investor has got a very small allocation in that particular IPO, they tend to hold on to it longer.
Right.
And the people who did not get allotted or lost the allotment in the IPO, they don't immediately go and buy, even if they like the company, because it lists at a higher price and they don't want to pay that price. Even in, say, 12 months or 24 months down the line of this company, there is a high propensity of winners of that lottery of IPO to continue to buy or hold that security versus the loser. So that is also, in a way, an endowment effect that comes in, that you love what you already possess.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.